Hi everyone, I hope you're all doing well, and today I'm going to be talking about 5 UK airlines, and I'll be giving my opinion on these 5 UK airline stocks and which ones are my favourite. Some of them I'm going to think are pretty decent, some of them I might not give as good rating to, but I'll kind of give my opinions because I know you guys quite often ask me about UK airline stocks. So I'll be talking about these 5 today, which I think are the 5 that come up in the comment section most often. And as always guys, this is only my opinion, I'm not a financial advisor. If you own one of these stocks and I don't give it a good rating, don't get too upset about it. It's only my opinion, guys. It's okay for you to have a totally different opinion to me, but obviously I'm just doing this for entertainment purposes. But I'll go through some of the reasons why I like these stocks and kind of just have a brief overview of them. Some of these stocks I probably wouldn't have gone through the actual earnings report for. So obviously when you're buying into a lot of these companies, make sure you know the company in and out. Make sure you've read the earnings report, because there could be some positives here that are in the background that might not be accounted for. So make sure you know your company in and out when you do buy into them, guys. But like I say, I'll have a quick run through these airline stocks and kind of give my opinion on them overall. So number one up is TUI, and I've seen this one come in the comment section a little bit more. Ticker symbol TUI, and I don't know about you guys, but I always think this company was better when it was called Thompson's. I just thought it was a cooler name. Anyway, that aside, obviously that shouldn't affect things, but the stock was doing okay at the time of COVID. It had kind of peaked in 2018, and then it had been on a little bit of a downturn. And going into COVID, the stock was around about 897, and the stock's down now to about 302. And the stock's dropped about 66%. So there's a fair bit of a drop in this stock price. And when you go talk about a lot of airline stocks, the main thing when you look into airline stocks is that you want to be picking a company which has a good balance sheet, a company which was doing good going into COVID, and then it'll give it a better chance of when it comes out of COVID. So you want to see strong earnings, strong revenue increases, a decent balance sheet. And a lot of these airline stocks are sold off, and because of them being sold off so much, I reckon all 5 of these stocks are stocks that will show some decent share appreciation over the next few years, because a lot of them are desperately sold off. But it's one of those where some of these stocks will gain better than others, and it's one of those where you got to work out which stock is going to give you the best share price increase over the next few years. So getting back onto TUI, when we look at first of all, we look at how the company was doing previously going into COVID, and the company on the earnings front was doing okay. We look at the earnings, and they were they jumped up to about 790 million, and then it actually started to drop down to 600. And then even 400, so probably would say on the earnings front it was decreasing. When we look at the revenue was kind of flatline really. It was always kind of in the 18 billion range, and then it did jump up to 19 billion towards the end of 2019, but revenue was pretty flat. Earnings were probably more on the decreasing side, so that was kind of a bit of a red flag. And when we do look at the future predictions of TUI, the future growth isn't fantastic. The revenue is pretty much going to be the same, and once again the earnings are going to be about in the same range as well. So from a point of view of going into COVID, not fantastic, and same for a forecast side of it, not a fantastic forecast side of it. When we go into the balance sheet isn't terrible. It has 2 billion cash and 4.2 billion in debt, so debt is double to cash, so it's probably not the best of the balance sheets out here. So it could have been a bit of a healthier position. So yeah, I mean, a lot of airline stocks will have debt, but the cash to debt ratio wasn't amazing. So from the balance sheet point of view, could do better. And when we look on the insiders, especially with what happened with a lot of these airline stocks, this is definitely where you want to see management actually buying a lot of shares. So overall, when I look into TUI, not amazing growth, and balance sheet not amazing, and insiders not amazing. So overall, first one, TUI, that was up. Like I say, a lot of these airlines will do quite well just because of how much they are sold off in share price. But when I look at TUI, not a great start with this one, and I'm going to give this one a 4 out of 10. Number 2 is AIG, better known as British Airways, so we'll take a look at this one. So ticker symbol AIG, pretty useful, and once again this stock was kind of doing okay before COVID. It wasn't going kind of anywhere, but it was trading around about 664, and then it dropped all the way down to 191. So this one has sold off a little bit more. It's down on a 71% discount. Now, when we take a look at what the company was doing pre-COVID, the revenue was around about it was steadily increasing. So it was the high 22 billion range, then 23 billion, 24 billion, 25 billion, and then obviously then we had the COVID drop. So it was kind of growing. It grew about 10% over the last kind of 2-3 years, which is okay. It's not exciting, but it's a little bit better than what we saw with TUI. When we looked into the earnings side of it, kind of a bit everywhere once again. There was some years where it was kind of around about the 2 billion mark, and then there was other years where it was popping up to the high 2 billion mark. So there was positive signs, but same again, there isn't massive signs of growth in this one. Revenue is, after COVID, is set to increase at an okay amount, and same with earnings, same to grow at an okay amount, but nothing too exciting. And then we take a look in the balance sheet. It's slightly better than TUI because there's 6 billion in cash compared to debt with 5.9 billion. So it's about equal on the cash to debt front, which is a bit better of a situation. And I think as well, British Airways would probably more than likely be one of the ones that would get bailed out if it really got into a bad scenario. And as well as that, Qatar Airways do own quite a bit of a stake in this one, which I'm sure would be more than willing to probably up their stake in this one. When we look at the insiders front as well, it was a little bit more active on the insiders front. We had quite a few more insiders actually buying into shares in this one, which was a little bit more of a positive sign. So overall with AIG, it definitely looks a bit more of a better position than what TUI was in, but same again, not massive growth on this side of it. Balance sheet was a little bit healthier, and the balance sheet was in a bit of a better position than what TUI was. So for this one, I am going to rate it a bit higher than TUI, but once again, not too amazing. So I'm going to give this one a 5 out of 10. And number 3 is Dark Group, and I do actually own shares in Dark Group, and also Dark Group is better known as Jet2. So we'll take a look at that one. So I'm going to try and do Dark Group without being biased, because obviously owning the stock, you're probably going to give it a little bit more of a better feedback than the other ones. So when we take a look at the share price was doing okay. It was, in the start of 2016, it was around about 500, 600, and then over the last kind of 3 years, it did go up a little bit to 800, 900, and then we had a big massive jump in the share price, which then meant it went up to about 1,800, and then obviously COVID happened, and the stock's down about 65% right now. So ticker symbol for this one is DTG. So overall, like, the share price hadn't done a lot until 2019, and then we did have a massive jump in the share price, and like I say, and then eventually we went back down to the levels that we were at pretty much in at the period before we did have the massive jump in the share price. So when we take a look at this one on the earnings and revenue front, we basically had the company pretty much doing around about 100 million in earnings, and then same again, it's a bit kind of all over the place. It's kind of gone up when you look at over the course of the 5 years, it has gone up quite a bit, really. You have to look and say that it is, pretty much the earnings have gone up about 50% consistently. So you'd say that it was doing 100 million in earnings, and then now it's doing about 150 million in earnings. So the earnings has grown, a little bit jumpy, but it has shown signs of earnings growth. When we look at the revenue front, at the start of 2017, it was doing about 1.72 billion in revenue, and just before COVID, it was doing about 3.5 billion in revenue. So over the kind of like last kind of 3 years, it has had its revenue double, which is a really positive sign. When we looked at the last two companies, earnings were pretty flat, whereas this one had grown its earnings by about 50%. Revenue as well had pretty much doubled and grown 100% in the last 3 years. So this one is showing a lot more growth than the previous ones. When we look after COVID, the earnings side of it looks like it's going to do okay. It's kind of going to get back to where it was. And when we look at the revenue side of it, once again, it's going to show some decent signs of growth, but not as it's kind of suggesting that it's not going to have growth what it was doing previously. This is one that I do actually have read the earnings report on, because obviously I own this one, and if you want my bull case on Dark Group, which I won't do because it's unfair to do it to the other companies when I hadn't done a bull case for them, you can go watch one of my videos because it is out on the channel. And then when we look at the balance sheet, we have debt of 485 million. When we look at the cash side of it, 1.6 billion. So we look at this company here, and compared to the other ones, we've looked at other airline stocks, and they've kind of had cash that's been kind of equal to the debt. This is the strongest balance sheet we've seen yet into any of these companies, which is a really positive sign. When we look at the insiders front, it is probably the worst one that we've seen. There's a lot of shares being sold and only some shares being bought. One of the person that has sold is the CEO, which is obviously a bit of a red flag. But the people that did buy was an executive director and also the CFO, which is obviously someone that obviously manages the finances. So that's a positive sign. Now I know for this one, the reason why the CEO probably have sold this is because he is actually starting to get, I think he's in his 70s now, Philip Mason. So maybe he's just wanting to take some profit out of the company right now. And obviously one of these sales was pre-COVID when the shares were at all-time highs, which is probably a really good decision, because at the prices it was at £14, it was probably slightly overvalued. So I would say the insiders is probably more negative than positive, but it's not terrible. So overall, to give opinion on Dark Group and to rate this one, first of all, balance sheet, strongest we've seen by far. Growth, definitely the strongest we've seen by far. Obviously the insiders is the only kind of negative with this one, but it wasn't a terrible insiders. So I would give Dark Group on this list probably an 8.5 out of 10. So next up is Wizz Air, and this is kind of an airline that's focused more towards European. And I've got to say with Wizz Air, they have done some good investments during the lockdown to try and increase the return to, you know, good revenue and income streams when everything does get back to normal. So the ticker for this one is Wizz, and going into COVID, the stock actually had a pretty good 2017. 2018 was a bit of a flat line, but 2019 was a strong year for this company, and it was around about 4,486 before COVID. And then it had a massive dip of 51%, so not as much as what the other airlines were. But the really interesting thing with this one is that it's actually recovered quite a lot more than the ones after COVID. So this one is obviously now only down about 20%. So this one has had less of a fall and also a quicker recovery, which is really interesting. So when we take a look into the actual company, we look at the earnings, and they were around about 250 million. And before COVID, it actually managed to double its earnings, which is fantastic. And then on the revenue front, in 2017, it was doing about 1.6 billion. And then before COVID, it was doing about 2.7 billion. So once again, a big, massive revenue increase and earnings increase, which is really good. And looking after COVID as well, it has a pretty decent revenue increase and earnings increase. So it's pretty strong from that point of view as well. So everything going into COVID on the revenue and earnings side is a bit like Dark Group, really positive. When we look into the financial side of it, it actually looks okay. You know, before COVID, it was a company that actually had a clean balance sheet. When we look at cash, 1.3 billion. When we look at debt, 318 billion. So cash to debt, once again, looking fantastic. You know, the cash compared to the debt is a very healthy amount, and this is what we want to be looking for. We take a look at the insider side of it as well. There was a sale in December. Once again, this probably will be because of, you know, just a bit of profit taking in because of how well the stock did, and that was by the managing director. And then in the COVID time, we did have a few people in the company actually buy shares. The CEO bought shares, the chairman bought shares, and the lead director bought shares, which is all really positive. So this company is pretty good. So to give a Wizz Air a rating, this is a bit of a tricky one, because when you look at it, it's a bit like Dark Group, financially a pretty good position, growth it was in a good position, and the insiders is a pretty good position. The only little thing you've got on it is the share price compared to the other stocks. So obviously this stock didn't decline as much as the other ones, and right now it's kind of not as declined as the other ones. So to give this one a rating, it's pretty hard. So on terms, I'm going to be fair, and what I'm going to do is I'm actually going to rate it the same as Dark Group. it was kind of a question where I gave it an 8 out of 10 or an 8.5 out of 10, just because of how the valuation is and it not being as cheap as what Dark Group is. You know what? Just to equal it up, I'm actually going to give it an 8.4 out of 10. So Dark Group is slightly better than Wizz Air just because of the valuation side of it, but still, Wizz Air definitely liking this one a lot more than these other two up here. So far, Wizz Air and Dark Group are definitely the two standout stocks on this list. We'll take a look at the last one now, which is Easyjet. So Easyjet, once again, is one that I own a small stake in, so I am going to be try and be unbiased. A company that is pretty good at kind of dominating that cheap airlines and has a lot more flight paths out there. The only thing about this one is that there has been a lot of unrest with the board, which is kind of one of the little negatives. You've always got to be careful with that sort of situation. But Easyjet, ticker EZJ, it's trading around about 563 right now. Going into COVID, the share price kind of hasn't done much over the last 5 years. The stock actually dropped down about 70%, and right now it's still down about 62%. So the stock has dropped quite a lot. So when we take a look at the company and how it was doing going into pre-COVID, once again, 2017 did about 260 million on earnings, and before going into COVID, 290 million on earnings. So earnings hadn't grown loads. We look at the revenue, 2017 did about 4.7 billion, and revenue it had gone up to 6.4 billion. So the revenue had grown a bit, the earnings had grown a little bit. Nothing like Wizz Air and Dark Group, but it was showing a couple of positive signs. And coming out of COVID, it looks like this company is forecasting to do quite well on the revenue front and also the earnings front. So it does look like this is going to have a bit of a decent recovery, but going into COVID, kind of not in a good, didn't have as good a few years as like Easyjet, Wizz Air and Jet2. Looking on the balance sheet wise, not too bad. The cash is 1.4 billion, the debt is 1.3 billion. So it has a bit more cash than debt, but not in the same position of what Wizz Air and Dark Group were. It does pay a little bit of a dividend. When we go into the insiders front, there was a few insiders selling and a few insiders buying. So there has been the lead director buying and member of the board buying. Strangely, one of the persons that bought and sold was the same person, so I'm not 100% sure what's gone on there. But yeah, at least there's some positive signs that people have been buying shares, and overall, okay growth, okay insiders, and okay balance sheet. So overall, my kind of opinion with Easyjet is it's definitely not a company as good as Dark Group and a company that is as good as Wizz Air. At the same time, probably in a little bit of a better position than what TUI was, and probably a little bit better growth than what IAG was. So for this one, I'm going to give this one a 6 out of 10. And like I said, I don't think it deserves the same rating as Wizz Air and Dark Group, because they're definitely the two standout performers in this area. So overall, that's kind of my opinion on these 5 airline stocks. And I hope you enjoyed the video, guys. I gave you a little bit more information on these 5 airline stocks. Maybe at some time I could actually do a deep dive into the company and talk about like the earnings report and everything. But I know some of you guys were really eager for me to talk about some of these airline stocks. So I hope you found that useful, guys. As always, if you can smash that like button, subscribe if you're new around here, and I'll see you in the next video.